For Chapter 2, we'll be looking at the Chapter 2 lecture notes and also Chapter 2 financial reporting under GASB 34. Now, fortunately, Chapter 2 is a relatively simple chapter compared to Chapter 1. In Chapter 2, we'll be talking about financial reporting for state and local governmental entities. Also, we'll be talking about discrete versus blended presentation. Finally, for state and local governments, we'll be talking about the different financial statements that need to be reported. Now, if you take a look at the lecture notes here, you can see that essentially we have 4 different types of financial statements. So we have governmental fund financial statements, we have proprietary fund financial statements, and we have fiduciary fund financial statements. Basically, you should know that these 3 funds are combined together and they create the government-wide financial statements. And also, it's important to note that the only fund that uses the modified accrual basis is the governmental fund. So we can see here, if you just want to provide the basic financial statements, you'd have to provide the government-wide statements, fund statements, and some notes. The minimum is to provide the basic information plus a management discussion and analysis, which is basically like an additional summary or explanation, and that's written by management. Also, some additional other required supplemental information like budgeting information, additional charts. The most comprehensive set of financial statements is called the CAFR, Comprehensive Annual Financial Report, and that also provides the same as what we just talked about, but it also provides additional data. Now, if you want to see what the exact components of a CAFR are, we have the notes here, and you can take a look at that yourself. But the most important thing to remember, again, is that governmental funds, proprietary funds, and fiduciary funds, they combine together and create the government-wide set of financial statements. Okay, so next, let's talk about reporting. Now, the question of reporting is really a question of how many columns do you need to have? Okay, so, for example, maybe I have revenue, and then I have revenue for the primary government. But let's say also that I have a community college. Maybe that should be its own column. Maybe I have a hospital. Maybe that should be its own column. And then I can put the revenue for the primary government, the community college, and the hospital. So the question is, how do you know if you should make a separate column, like community college or hospital? And how do you know if you should just include everything in the primary column? How do you know when to do what? Well, this is an issue of primary government and component unit. Okay, so remember, primary government, basically this is your default category. Primary government is where you have blended presentation. Blended means you don't make a separate column. You just keep everything in the default column. So if I were to use only the primary government column, the default column, then that's called the primary government column, and that's called blending. Now, what if I decide to make a separate column? If I make a separate column, the separate column is called a component unit. Component unit. So community college and hospital, these are component units. And when you make a component unit, separate column, that's also called discrete presentation. Okay, so how do you know whether to use a primary government default column or make new separate columns? The issue is accountability. That's how you know. So if you control your own money, then you're typically going to be a component unit. Right? So we can say if you control your own money, and controlling your own money means you make your own decisions, then you're pretty much independent. You can think of that in real life too. In real life, if you have your own job, you make your own money, you have your own place, you decide what to do each day, then you're separate, you're a component unit, and you should use discrete presentation. So in this example here, we have a community college. They make their own money because they charge tuition to the students, they get grants, they make their own decisions, so they should be a separate column. If you're a separate column, that's called a component unit, and it's called discrete presentation. Also, you should know that if you have an entity that is very large in nature, if it makes up 10% of your assets, liabilities, revenue, expenses, and if it's 5% of your assets, liabilities, revenues, or expenses for government and enterprise. In other words, I'm not going to ask you this, but just know that if you are pretty big, then you should also think about making a separate column. All right, so all of this is to say that when you do your financial statements, you can see that we have these different financial statements that you have to produce. So once again, you have governmental funds, proprietary funds, fiduciary funds. Remember, governmental funds use the modified accrual basis of accounting. Everybody else uses the full accrual basis of accounting. Now, let's talk about these different financial statements. Now, there's an example of each financial statement in your textbook, so you can take a look at that. But I want to point out a couple things. Statement of net assets. So statement of net assets, that's also basically a balance sheet. So balance sheet has assets, liabilities, and net position. Statement of activities is an income statement. Okay, so make sure that you know these different differences. Now, modified accrual. Now, modified accrual means that when we have a balance sheet for governmental funds, we have assets, liabilities, and we don't have stockholders' equity, we don't have net position, we have something called fund balance. What about a statement of revenues, expenditures, and changes in fund balance? That's basically like an income statement. Make sure that you know that you don't have expenses, no expenses. Instead, you have something called expenditure. Now, why do you have expenditure? The reason why is because everything that's created here is using the modified accrual basis of accounting. So expenditure is actually a term that's used for modified accrual. For proprietary funds, statement of net assets is like a balance sheet. What about this financial statement? This financial statement is called Statement of Revenues, Expenses and Changes in Fund Net Asset or Fund Equity. This is like what? It's like an income statement. Here we have a statement of cash flow. So what does a statement of cash flow do? It explains why cash goes in or out. And know that you have 4 categories. The 4 categories are operating, non-capital, financing, capital financing, and investing. Now, the question is, why does the proprietary fund have a cash flow statement, and how come all the other funds don't have a cash flow statement? The reason why is because the proprietary funds are business-like in nature. So if you have something that is kind of like a business where you have an exchange with another customer, then you're going to use a proprietary fund set of cash flow statements. Here, for fiduciary funds, statement of fiduciary net asset, what is that similar to? Balance sheet. Finally, statement of changes in fiduciary net assets is kind of like an income statement. Okay, now I say roughly like an income statement. Now, it's not really an income statement. It's just showing that money coming in, so additions and deductions, money going out. Okay, so Chapter 2 is relatively straightforward. Just make sure for Chapter 2 you know the difference between blending and discrete presentation. That just means making a new column or not. And then also know that you have these different set of financial statements.